Hey everyone, welcome back. Let's do a quick audio check before we get started, and just let me know if there's any issues. But welcome back to another NFP session. We missed January, but it's good to have you back here in February. Welcome to 2024. All right. Good evening, good afternoon, good morning, depending on where you're from. Okay, audio seems to be good on my side, and probably a bit too loud, but that's okay. Let's get started. So welcome back to news trading session. This is your non-farm payroll session. And my name is Virenjaro. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when you're determining the volume of your transactions and consider all possible risk factors. And I do expect a little bit of a volatility in this NFP session, considering how the market has been moving this week. Okay, there's going to be bonuses for participants. Obviously, I'm going to show you the promo code to double your deposit bonus. So that's going to be shown very, very soon. And then you should have access to the private Telegram channel if you register to this webinar through your email. Okay. All right. This is a code that you can use. It's updated. It's now Nonfarm 2024. So make sure you are using this code if you're depositing into your Octa trading accounts to double your deposit bonus. Okay. With that, let's get started because I'm going to go through some theories, and if time permits, hopefully we can do a little bit more than just the major currencies. I do really want to do the US index. Okay, so the US 30 and the Nasdaq, very, very interesting instrument to trade as well. Okay, a little bit about myself. If you haven't been attending my webinars, my name is Virenjaro. And I've been a full-time trader officially to this year, 2024. It's now 20 years. Okay, so I've also been a professional trading coach and technical analyst since 2007. And my expertise is in the Ichimoku Kinko Hyo technique. And if you have attended some of my previous webinars, you would probably be a little bit more familiar with how I use those Ichimoku Kinko Hyo. I'm also a director of Zenefix, an independent market consulting company. I've also been, the guest speaker, invited as a guest speaker at the Trading and Investing Expo across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences. Okay, so this is what we're going to go through today. As per usual, I'm going to explain a little bit about the BLS, the Bureau of Labor Statistics, and what is the non-farm payroll, what the unemployment rate is, and also the average hourly earnings, because we do focus on that as well. And then I'll run you through what the expectation is for tonight, okay? And we'll go through the NFP trading strategies, and then obviously we'll wrap up the other half of the hour with real-time example of news trading. In fact, we are actually going to be trading live together, as per usual, every single month, okay? Okay, so what is the Bureau of Labor Statistics? So the Bureau of Labor Statistics, or the BLS, is a federal agency that collects and disseminates various data about the US economy and the labor market. And also its reports include the Consumer Price Index as well as the Producer Price Index, which is going to be released next week, I believe. Both of which are very considered, very important measures of inflation. And within the labor market data, the most interesting aspects are obviously the number of people employed outside agriculture. This is what we call the non-farm payroll, non-farming, all right? It's a payroll for non-farm jobs, basically. And the unemployment rate, which is something that we always expect together with the release. All right. Just so you know, at the beginning of the year, the agency actually publishes a calendar with a release date for the entire year. And the unemployment data is published every first Friday of the month, but if it falls on a holiday, the publication is usually postponed to the following week, and occasionally to Thursday of that week. Maybe a few exceptions. Good Fridays, typically we still get the release of the NFP on Good Fridays. Okay. Inflation data and CPI and PPI is typically published on the following Wednesday or Thursday after the labor market data release. For this one, I believe it is actually next Thursday. Okay, so what is the non-farm payroll? So the non-farm payroll, the NFP, it's a report that's monthly released by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employment, and non-profit organizations. When we talk about private household employment, if it's a home industry, you won't be in here. If you're a freelancer, you will not be in this number as well. Now, market analysts and investors usually look for NFP figures above 200,000 as it is seen as a positive sign of a healthy job market and growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. Just to give you a little bit of an illustration, the past 3 months, I think we only got one number that is above 200,000. It could actually be more than 3 months. I believe it could be about 3-4 months. Okay, but we finally get something that's above 200,000, which is the data that was released on January, which covers December data, and the number that's actually released today that actually covers January's data. Okay, so it's always 1 month behind. Okay. So the NFP data is a crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below the market expectation may be viewed negatively, while one that exceeds expectation may be viewed positively. Now, let me pause here for a little bit and let me give you a little bit of an explanation to how we read it up. Sometimes the previous month's data get revised, and we always base on that revision whether or not this month's number is actually good or bad. So maybe the NFP number for this month, it's expected to come in at 180,000. The previous month is 216,000. If the number comes in at 180,000 and there is no revision from the previous month, then we get a low number, right? It's still a positive gain. It's not a negative or anything like that. It means like every single month, there's going to be this amount of jobs added into the economy. Now, if there was a downward revision, and let's say the downward revision from 200,000, 216,000, it was revised down to 170,000, and then we posted 180,000. That's actually an increase of 10,000 compared to the previous month. So this is what makes it tricky, and this is what makes it a little bit more volatile, because there's going to be revisions that's going to impact how the market react to it as well. Okay, so because this is so important, the NFP figures are closely watched by traders and investors, particularly in the forex market. We typically don't see a lot of impact in the equity market, but we do see a significant impact into the forex market. So currency pairs like the Euro USD, the dollar Japanese yen, the dollar Canadian, the pound USD, the Aussie USD, they are going to exhibit high volatility in response to the reports release. Okay. All right. So this release is actually very important to a lot of traders. Like it or not, there's going to be controversies surrounding the NFP numbers. If you are familiar with the NFP numbers, it's tricky to navigate, but you can actually figure it out pretty early. For example, if you do 2 or maybe 3 NFP sessions, you would actually understand how the the NFP data actually impacts the market during the initial release. But the problem with the NFP market is that because it kind of typically it goes in one direction, it kind of reverses and then it'll revert back again, because there's a lot of volatility during the release of it. There are actually going to be potential trend reversals, number one, and sometimes technical analysis kind of stop working as well. So I'm going to go through several strategies to actually trade the NFP release itself, not considering how it measures into the fundamentals. Okay. Now, according to the BLS, the non-farm employee classifications account for approximately 80% of US business sectors, contributing to the GDP itself. So if we have a very, very low NFP numbers consecutively, then we should expect the potential impact on the gross domestic product of an economy as well. So GDP is used to measure the economic growth, and obviously if the labor market is in slump, the GDP is going to be negatively impacted as well. So this is why it's very important. And a lot of traders, beginners or veterans, either choose to trade the NFP release or kind of stay away from the NFP release, depending on their strategies. But yeah, I think a lot of new traders actually wanted to trade the NFP release because it's very volatile. And there are opportunities to be made as well. We will talk more about the negative and the positive on news trading. That's going to be on a webinar next week. But for now, this is pretty much it. So this is why the NFP number is so important. Now, again, the best assets to trade the non-farm trade, basically the Euro USD dollar, Japanese yen dollar, Swiss Aussie USD, New Zealand USD dollar, Canadian, Pound USD, gold is also very volatile, and it has a very high impact on how gold prices move as well. All right. The next set of data, again, tonight we're not just looking at one set of data, we're actually looking at a minimum of 3 sets of data. The other set of data is the unemployment rate. So the unemployment rate is calculated in percentage and is published at the same time as the NFP. The unemployment rate represents a proportion of the labor market that is currently not employed, but is capable of being employed. So if we break it down, and I'll explain this to you a little bit, but let me go through for a little bit. The unemployment rate is actually determined through a survey of approximately only 60,000 households. So imagine this, how many millions in the US, and the sample size to get the unemployment rate, it's only 60,000. Now, is this accurate as 100% representation of the current state of unemployment in the US? Probably not, but it still is a data that we kind of refer to get a little bit of a glimpse into, how bad is the unemployment rate in the US, right? And according to the US BLS, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job. They must have actively looked for a job in the past 4 weeks, and they must be available to start a job if offered one. Now, these 3 pointers basically means the sample data that was taken, that 60,000 households, are going to be sampled out of unemployment claims. So you guys see every week there's actually a news release that's called weekly unemployment claims in the US, right? So the 60,000 household is basically someone that actually take this unemployment claims because they must be without a job to claim that. They must be actively looking for a job to be able to claim that unemployment benefits. And if a job is offered to them, they have to take that job. Okay, so this is where the sample data is coming from. And this is why we actually tally up the weekly unemployment rate, the weekly unemployment claims as well, to kind of predict what kind of unemployment rate we are actually going to be getting that month. Okay. So if a person doesn't meet that criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. The third set of data is the US average hourly earnings. This is a report released monthly by the BLS as well, alongside the unemployment rate. This measures the average hourly earnings of workers in the US economy. The data is collected through survey of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. And economists, investors, and traders monitor this very closely, as it can actually offer valuable insights into the state of the US economy and its potential impact on inflation. Because if this number goes up, if the average hourly earning goes up, there's actually a higher probability that the inflation number is actually going to go up, because they are basically getting paid more. People are actually getting paid more, and if people get paid more, they are likely to spend more, and that could kind of boost up inflation as well. Okay, so when trading based on the US average hourly earnings data, traders often scrutinize changes in the wage growth per month compared to the previous month, as this can signal shift in the labor market and potential inflationary pressures. So we actually use this not to determine whether or not, the labor market is actually pretty bad. No, but we are monitoring this number because if it increases too quickly, there could be a potential of what we call a wage cost spiral, which is higher wage going to push inflation up. Okay, so maybe for now we do want this number to go down. If everyone wants the FOMC to start cutting interest rate, then typically the average hourly earnings needs to either be stable or it needs to come down a little bit. Okay, so higher than expected wage rate growth may indicate potential inflationary pressures I just explained, which can result in higher interest rate and currency depreciation. Conversely, a lower than expected wage growth rate may indicate weaker inflationary pressures, which may lead to lower interest rates and currency depreciation. As with any economic report, it's important to consider the broader economic context of the other indicators as well when trading based on the US average hourly earnings data. Okay, so to join the Telegram channel, I think you should register through email, but I think the moderator team for this session could probably help out. Oh yeah, there we go. There's a link already out there. Thank you. Okay, so we're going to go through some of the economic calendars as well as chart history, but I do want to show you a little bit in terms of how the NFP release is impacting the market. If you guys are going to be attending this every month, you know what to expect, right? We typically get a little bit of an increase or decrease, and then market kind of snap back a little bit. So if you take a look at the release, which is that red line, you can see how the immediate reaction is. The actual number itself kind of doesn't matter. I'll be honest with you. We use that for longer term analysis, but during the trade releases itself, which we'll cover next week, it actually has a minimum impact. It will probably, it'll give you the direction of the market, but in terms of whether or not, it's like, wow, it goes in one direction. No, typically what we see in the market is that market typically goes in one direction, and then it kind of reverts back before it does a breakout. And then once that's done, this is what we call the fade. And then the initial reaction to the market can continue. So you can see this here for this one here on April. You can see the actual number is 236, which is higher than the consensus of 228. But it's lower than the previous number of 326. But it still pushes the dollar up. Initial reaction was price going up, and then it kind of pulled back. But in the long run, that initial reaction was the right movement overall, right? Because market kind of just rallied up. Same thing with this one here. For the pound USD, we saw a drop to the downside, and then market kind of pulled back to that horizontal line that you see there. That's kind of the limit. It's kind of the stop order that we are going to be using tonight. And once it goes back to that level, take a look at this one here. It does take about April. It takes close to about 3 to 4 days before the market kind of goes in that direction. Okay, it's a very similar situation as well. Initially, we get a sell stop trigger in this example. Market comes back, and then it kind of fades there, and then it will continue to the initial direction that the initial breakout happens. Okay. So very similar situation. All we do every single time. I would say I've done more than 250 NFPs in my career, and I can say this with confidence. About 90% of the time, it does break and then fade, and then it continues in one direction, in that direction as well. Okay, so again, revision. I'll talk through the revisions later on when the number is released, and we will probably look at that. But what typically happens here, again, we typically see one breakout. Market kind of comes back to the level where before it breaks out, it stabilizes, and then it kind of goes in the initial breakout direction. Okay, so these are the expected number tonight. We have about 5 minutes, so I can go through this very quickly. Let's focus on the NFP numbers. The previous number is 216,000. We got a consensus of 180,000. The unemployment rate is expected to pick up from 3.7 to 3.8%. Now, for this set of data to be positive or negative for the US dollar, the number has to be the opposite. So if we get a higher NFP numbers, for it to be positive for the US dollar, we need the unemployment rate to be stable or drop down, okay? Because if you read through the data, the non-farm payroll is new jobs added into the economy, while the unemployment rate indicates, the higher it goes, that means a lot more people, they don't have a job, Okay, so the way we read this is always in the opposite direction. So let's say if we get the non-farm payroll here as per consensus. We have a drop from 216,000 to 180,000, and we have unemployment rate goes up to 3.8%. This would indicate there's a potential for the US dollar to weaken. But if we get the non-farm payroll, for example, coming in really hot, above 200,000 or maybe above 220,000, and the unemployment rate goes up as well, then there's going to be a problem. The way we read this, we are getting a mixed data because the NFP numbers adds more job into the market, but the unemployment rate tells you there are actually more unemployed people in the economy. So that's how we kind of figure out whether or not that's going to be a mixed data. Okay, and the average hourly earning for today, we are expecting this to drop from 0.4% to 0.3%, and you probably need to consider that the previous number that was actually released on January, that is actually the December number. And typically in December, there are actually more employment. Okay, because average hourly earnings measures the full-time and part-time jobs as well. So it was a little bit higher because people are taking part-time jobs for the holiday break in the US. So we are actually getting a little bit more good numbers in terms of the labor market. Okay. What a roller coaster week. Yeah. I warned you on the outlook on Monday, it's likely going to be a roller coaster week. It's going to be very volatile. And what's really disappointing is that we actually see a breakout in the market still kind of move back again. So I do expect extra volatility for tonight. Okay, so let me cover it very quickly. Obviously, you can do a few things with the NFP, but you can do pre-NFP trading. So a potential strategy is to trade the market's anticipation of the data release. This approach involves opening position in the days leading up to the NFP release, with the expectation that the market will begin pricing in the anticipated NFP outcome. You basically close your positions before the actual NFP release to avoid extreme volatility that can follow. Now, when we talk about extreme volatility, there's another thing as well. You should expect lower liquidity. What does that mean? When we talk about lower liquidity, basically during the news release itself, spreads could actually widen, and sometimes your order doesn't get triggered at that very specific price. Sometimes, the liquidity was so dry, market pushes it up, you might actually miss your entry by about 3, 4, 5 pips. So that's kind of a risk as well. Now, the one that we are going to be doing is actually the straddle strategy. Okay, so the straddle strategy involves placing 2 pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP release. That way you can potentially profit from a strong price movement in either direction, and once one of the orders is triggered, immediately cancel the other order to avoid being exposed to further market fluctuations. And I'll continue with the fate after this, but we need to go to the chart right now to start placing our orders. And do we see a little bit of a range here on the 15 minutes time frame? It is a little bit choppy, so I'm actually going to go out on the 30 minutes time frame. The hourly time frame. This is on the Euro USD. And let me place a buy stop. So I want to use a buy stop on the upper side. And for the buy stop, I do actually want to have it at 1.09. Okay, just a little bit higher. In terms of the sell stop, I will take a little bit of a lower number. I don't like 75. I know I can place it here, but I think it's a little bit too close. So I'm actually going to lower it a little bit to about 1.0865. Okay, so you can see here, that's the order. The buy stop is going to be at 1.09. The sell stop is going to be at 1.0865. For the pound USD, this one here has been a little bit more volatile today. The past 2 days actually. So I would actually have my buy stop a little bit higher at 1.2775. And in terms of the sell stop, I prefer a sell order. I'm a little bit biased, but we'll see. I would have my sell stop a little bit lower, maybe about 1.2735. Okay, just give it a little bit more distance. So again, let me repeat that. The buy stop is going to be at 1.2775 for the pound USD. The sell stop is going to be at 1.2735 for the pound USD. Next up is gold. And I have to be really quick with gold here because there's a high potential this could actually start breaking out in the next few minutes. This one, the sell stop, I want it to be a little bit lower. I want to have it at about 2050. No, actually not that low. Yeah, about 2050. All right, 2050, 2050. That should be enough. For the buy stop, I want to have it a little bit closer, maybe about 2057. Okay. So buy stop for gold is going to be at 2057 or 2058. Sell stop is going to be at 2050. And moving on to the dollar Japanese yen, this one here is kind of okay. We can do a little bit of a smaller buy stop here. Buy stop is going to be at about 146.80. Sell stop, it's going to be below 146.50. About 146.45, 146.43. You want it a little bit lower, you can have it at 146.40. Right? Stop loss is obviously on the other side of this as well. So if you get your buy stop triggered, the opposite side will be your stop loss. Okay. Again, if one order is triggered, for example, the buy stop is triggered, you need to immediately cancel the sell stop. Okay. How about crude oil? Oh, that's a good one. Do I have XCI? Yeah. XTI typically doesn't have that much of an impact. I think we have a little bit more time. We've got 3 minutes to go. The XTI, this one here, unfortunately, we cannot do a straddle because the market is currently pushing lower and lower at this point in time. Okay, so unfortunately, we're not going to be able to do a straddle. So dollar, Japanese yen, euro, USD, pound, USD, gold has already been in there. The other thing I want to talk about, it's actually NASDAQ. So NASDAQ, there's actually a potential straddle that you can do. You can have this one here about 175.60, and on the lower side, you can have it below 17,500, maybe about 17,485. So yeah, there we go. NASDAQ, you can actually straddle this one today. For NASDAQ, the buy stop is going to be at 17,561, or sorry, 17,560. And the sell stop is going to be below 17,500. I would probably have it below 17,485. Can we do so for the US 30? We have a buy stop for the US 30, which is a little bit higher because we want to go with the high yesterday, 2 days ago. I think it would still be considered an all-time high actually. So about 38,620, and a sell stop, this one here, about 38,500. Okay, so US 30, 38,620 for the buy stop. Sell stop is going to be below 38,500, just slightly enough below it. All right, what about New Zealand USD? We got 1 more minute. Hopefully we can do New Zealand USD, but yeah, let's try. I do typically avoid New Zealand USD during the NFP release. Can we do a straddle? No, I don't think we can do a straddle. This one here has been pushing a little bit higher here, so it'll be a little bit risky. But if you want to have it, you should have it above 0.6160 if you want to do a buy stop. All right, news is coming out. So let's do this very quickly. What's the news? Come on. In a minute now. I think all the I'm looking at some green signs here, very intense here. News is gonna get released. Hopefully we didn't get a whipsaw. Hopefully the buy stop and the sell stop doesn't get triggered at the same time, because that's the worst thing that could happen, and it does happen to us a few times last year. All right, sell gold, sell pound, sell everything. So yeah, pound USD buy stop is actually needs to be closed. Buy stop for euro USD needs to be closed. Buy stop for gold needs to be closed. We are sell position stronger dollar. I haven't even read through what it is, but yeah, we've broken through, and that was easy. It might actually be good. Nonfarm payroll, amazing. This is nuts. Previous number was revised up from 216,000 to 333,000, and the actual number is 353,000. Unemployment rate is flat at 3.7%. Average hourly earning is up. Instead of dropping down to 0.3%, it's up to 0.6%. This is nuts. This is more like a one-way ticket. So you can take a profit right now if you want to, because we're running, and which is good. And I think this is probably one of the better records here. But once it hits 2,000 on my screen, I'm actually going to close all the positions. Come on. This is good. The number is very, very good. It's crazy good for a labor market. This is such a strong number. So let's see if we can push 189 here. Nope. If it drops down, I might actually start closing position, but I'm actually holding. The number is actually really good right now. So let this one run a little bit, okay? You can start moving your stop losses to break even. Just in case, you can start moving your stop losses to break even, depending on where your entry is, because if you're afraid, do a break even. If not, you can do this. For the pound USD, you want to have your stop loss above 1.2775. Euro USD, you want to have your stop loss above 1.09. Gold, you want to push this one a little bit higher, about 2060. So if you guys were quick just now, you would have been out with a really good profit. Right, for the Dow Japanese yen, I would actually want to have a little bit of a stop loss closer to about 146. So I actually really want to have it about 146. It is a little bit low, but this is just for protection only. New Zealand USD was triggered. US30 was also triggered. Yeah, I think US30 was triggered. Buy stop for New Zealand USD. Why is it still there? I think I closed one trade wrong. All right, Nasdaq, we're good. This one here is dropping a little bit. I'm not too keen on Nasdaq because that could actually be a strong fade on Nasdaq, but make sure you have your stop losses. And US30, this is a miss. I think I did some trade. I think I actually closed it by accident. But you can see the break to the downside. That's very significant. For gold, for oil, unfortunately, we can't do anything for oil because price is already pushing down lower. New Zealand USD, very strong drop. This is just crazy. All right, this number is surprising. Let me break it down to you in context. The previous number again was 216,000. It was revised up to 333,000. And the expectation for tonight was 180,000. Let me pull out my calculator. We got 353 minus 180. We are 173,000 above the consensus, nearly double that consensus. All right, this is nuts. Then the average hourly earnings pushes it up even further. It went up from 0.4% to 0.6%. Okay. Wow, this is just crazy. All right, you can stay in the trade if you want to, but getting out of the positions. This is still currently running okay. I would say move your stop loss to break even and be happy with it. This is a good number. I need to move on very quickly. The reason why I need to kind of get out really quickly here, because there's always a potential for more fade to happen. You can stay in this trade. This is undeniably strong for the US dollar. Couple this with the FOMC from Thursday. The FOMC is nuts. It's basically being very hawkish. They're kind of pushing back March rate cut to earliest. We're looking at June earliest. So yeah, coupled with that, it's a very, how do I put it? The U.S. economy is very strong, and one of the few things that the FOMC mentioned was that they're going to look at the labor market and just leave it be, because if the U.S. economy is strong, let them be. They don't even care about the soft landing anymore because they're looking at the numbers and they think that there could actually be a strong U.S. economic data in the coming months. Yeah, revised number is nuts. 333,000. That's crazy. It should be strong for the USR. What interval I'm using for the range? I would look at 15 minutes, but if 15 minutes is too choppy, I would go 1 hour. But I don't go any higher than 1 hour. I will never use 5 minutes. Look at this. Look at everything. It's just dropping down like a stone. So if you are in that trade, I already got up from my trade, but if you're still in that trade, move your stop loss, please. Move your stop loss to break even. You might want to lock in some of the profits there, but you know, if you want to have a really risk-free trade, you can move all your stop loss to break even. All of the trades that we did was we shorted euro USD, we shorted pound USD, we shorted gold, we bought dollar Japanese yen, we shorted Nasdaq, we shorted US 30, we shorted New Zealand USD, which is so crazy. The drop is nuts. Look at the euro USD. 61.54. Yeah, it's only 50 pips, but look at the chart. This is mental. This is so strong. The drop is so strong. The number was ridiculous. It's so strong. Look, you're looking at a huge fall in the market. The market realizes what's going on. And I've been having that bias throughout January. I think the US dollar is going to get stronger. I think the US dollar is going to get stronger. And we got that. This is nuts. This is such a strong candle because you can look at the comparison here. If it closes in like this, and we are only 6 minutes in, right? We could have the fastest trade just now, but I just want to, make sure that I'm reading the numbers right. But yeah, we're only 6 minutes in. Things can change, so be very careful. Let me bring up my trading view, because I need to start looking at some of the key levels in the market to watch out for. The drop is significant. We are breaking below 1.27 on the pound USD. This is impressive. Very, very impressive. All right, let's break it down. And I haven't even looked at the Aussie USD. The Aussie USD, this is nuts. It just went drop 50 pips. And for the Aussie USD and New Zealand USD, 50 pips. It's significant. Now, reason being, I want to go through very quickly. We're likely going to be looking at a little bit of a support level coming in very soon on the Euro USD. Either it's going to start bouncing off 1.0810, or it could actually dip down to 1.08, which goes to where our next strategy is, which is fading the initial move, right? So this strategy involves waiting for the NFP release, observing the initial market reaction. We saw that huge market reaction. No matter how strong it is, there could still be a potential fade. So I don't really like staying, if you are trading it, just for the news, right? I know some of you here are doing it like, oh yeah, you know what, I'm gonna go nuts. I'm gonna hold that position. I'm gonna do it. I'm gonna carry a swing trade. Doesn't matter. If that's your thought, that's okay. But the fade move, this is something you need to be careful, because if you're only trading the news, you get in and you expect to get out, right? Sometimes the fade happens. When the fade during the news release, it could actually easily wipe out all the gains that we have right now. So once the initial volatility subsides, I'll give it about 10-15 minutes. Okay, look for opportunities to trade against the initial move. This approach is based on the idea that the market often overreacts to the NFP data, and that a retracement or reversal is likely to follow. And let's go back to the chart, and let me give you a little bit of an illustration. Take a look at the Euro USD here. We're looking at a little bit of a support building up. There was a previous order block that was broken on the Euro USD. This is currently where it exactly bounces off from. So be very careful. You might actually do a little bit of a limit order as well, because if you're expecting this level to kind of hold, 1.08 might hold, you can actually start doing a little bit of a limit order, right? You can pick it out at 1.08, maybe have your stop loss about 20 pips, and you might be able to potentially trade up to 1.0850. Okay? Or if you're going by the fade, it might actually go up a little bit higher, maybe about 1.0870. But the fade is very difficult to do. It takes a lot of guts, and you need to make sure you're looking at the correct level. We can't just randomly trade on a fade. But if you want to trade the fade, you might want to have a limit order 1.08, have a stop loss at 1.0780. So let me give you a little bit of illustration on the Euro USD. So I'm going to create a limit order. Just now we were using a buy stop. This time I'm going to be using a limit order. I'm going to place it at 1.08. All right, it's just 17 pips away. And what's beautiful with this is that your stop loss is typically very, very small. So, right, I can have my stop loss at 1.07 80. Okay, and I'll take my profit at 1.0850. So you got that. Risk reward ratio is obviously 1 to 2. It might actually start bouncing off. So you kind of need to understand. This gets a little bit more technical because if you understand the SMC webinars that I've done last year, I believe it was last year, right? We did talk about some of the blocks and whatnot. Those are key to identifying whether or not there's actually going to be a potential bounce. I can buy in right now, but I think, you know what, we're so close to 1.08. I think there's actually a possibility for price to go to 1.08. And if that happens, I'm only risking 20 pips. It's not a big deal, right? It's kind of small for a potential 50, 70 pips gain. It makes sense. Now take a look at the pound USD. Why is this one here a little bit scary? There could be a potential fade because this is currently bouncing off the Ichimoku cloud, and it's still within the range of about 25 pips from 1.27. So this one here, I would actually trade the fade if price moves back above 1.27, and I'll have my stop loss at 1.2680, and I would be aiming for a potential return to where the range breakout happened, maybe about 1.2740. Probably not a crazy good risk reward ratio, but it's still there as a probability, right? We can still do that, but I would wait for price. Maybe it couldn't come down lower, bounces up a little bit, right? We can do that, but if price continues to break even lower, you need to cancel that order. Okay, so if price breaks below the Ichimoku cloud, this order, you need to cancel it. It's not going to work anymore. Okay. From this result, then, the stock market is going to open lower, possibly. But again, let me remind you, the stock market might not react the same way as the currency. The currency is reacting this way because the overall tone is that, oh, the US dollar is stronger. But if we go by the stock market, a good labor market, it's a good economic data, and that's good for the stock market. We should think about it that way. Okay, the stock market is the way we look at the fundamentals for the stock market is slightly different. It's not like how we look at the US dollar. Oh yeah, this is strong for the US dollar, everything is going to get smashed. Stock market doesn't do that. The index might indicate, oh yeah, the market might open lower, but then everyone might think, oh, more employment, good. Companies are going to be making money, they're hiring more people, they're going to grow. Stock market is still potentially going to grow as well. But yeah, if it's a prediction of a lower open, yes, but individually, if you take a look at the stocks, obviously you need to take a look what's good for it, and sometimes we need that lower open because then we'll get a much better price for the stocks, depending on what you're looking at. Yeah, it means a good economy, which is something that's good for the stock. Exactly what I just explained. But yeah. This is amazing. We're starting to look at price slowing down, right? We look at the pound USD, we look at the euro USD, it's starting to slow down. Take a look at where it's actually slowing down. Aussie USD is slowing down at 1.0650. That's a psychological price level. So we might actually be looking for a little bit of a fade. The problem with the fade is, are you brave enough to counter such a huge drop in the market? Are you brave enough to say market is going to go up after this because you're going to go against the trend? But typically, we look at the previous range for the Aussie USD. That's about 0.6580. So for example, on the Aussie USD, you can actually start buying it now. Have a stop loss below 65.50 and aim for 65.85. That's still going to give you about 1 to 2 risk reward ratio, risking 13 pips for 25. I don't like it. Right? It's only 25 pips. Nah, I'll pass. But you need to understand a little bit more technical because you kind of need to find out, this is a strong level. This is where the market might actually reverse and stuff like that. Okay. All right, gold. Yeah, let's take a look at gold. Can we do a fade on gold? Let me go daily on gold a little bit because definitely still need to look at the range on gold on daily here. Did we surpass that fair value gap? Yeah, kind of, right? But once it starts dipping down below the resistance one, it might actually go back all the way to pivot. But yeah, we have resistance one on gold. That's a weekly resistance, by the way. That's a weekly resistance one pivot. Okay. Now let's take a look at gold. This one here is dipping a bit lower. We do have a little bit of support. That support is going to come in about here, about 2030 for the support. So we'll see. If price bounces off 2030, then yeah, there might be some profit taking. We might actually see price pull back, all the way up to 2050 again. So if you're thinking if price bounces off 2030, if you think that's going to be strong enough, you can have it. Just make sure your stop losses are not too far. I'll probably say $5 is probably the most, and then you can aim for 2050. That's going to give you a really good risk reward ratio, nearly 1 to 4. The drop on gold just now was $24. That's nuts, but it's undeniable. The labor market data, that's a shocker. And in my 20 years of history, it's very rare that you actually get something that's actually revised up, right? And then the actual number is nearly double the consensus and it's higher than the previous month's revision. That's number one. This is super rare. Number two, unemployment being stable helps. And number three, average hourly earning goes up by nearly double. It's also significant, and all three align. This is actually very rare that we saw this kind of numbers. So I can show you the numbers here. $353. That's a lot. Market is only expecting 180. Previous number was 216. Remember, I still have it on the slides, and the release was 313. Look at this. Previous number was 216. It was revised up to 333. Crazy. All right. Let's talk about the last trading strategy that we can do. Post NFP trading. Instead of trading during the release, you can wait for the market to digest the NFP data and look for trading opportunities in the hours or days following the release. This strategy allows you to avoid the heightened volatility during the release and focus on longer term trends that may emerge as a result of the NFP data. You got a couple of options. You can start analyzing this about an hour or two after the NFP data release. Okay, but to a lot of traders, they would actually start analyzing and trying to figure out, what suits where the market is going to go based on the NFP numbers on Monday during the European Open. That's when market is actually going to start pricing in, because this is Friday. The Asian market is closed. The European session is about to close. So the only thing running is the US session. Obviously, Monday comes, the Asian traders are going to look at the NFP number and they're going to say, wow, that's crazy, right? So they're going to start, pushing out in the same direction as well. So the fade typically ends once a lot of traders kind of figure out, they'll start looking at it post NFP numbers. All right. Regardless of the strategy you choose, keep the following tips in mind. You need to manage your risks. Always use appropriate stop loss orders and never risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news, forecasts, and market sentiment leading up to the NFP release to make better informed trading decisions. Be very flexible. Okay, be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. If just now the number was bad, I would probably close any short Euro USD, short pound USD, because the fundamentals, even though it might actually open up the order, which is very rare, but if it does, let's say, it triggers my sell stop. But if we take a look at the numbers there, maybe the unemployment rate was 3.9%, which is bad, I would potentially close the trade earlier as well. Okay, but overall, I think this is good. You might see a little bit of a fade. It will still happen, right? A fade is kind of inevitable. It will happen. But if you're there for the longer term, I don't think the fade really matters. But think about it this way: you don't actually have to trade the fade. You might look at the fade there as a potential for, maybe price can retrace a little bit higher. Maybe you can wait for price to do that and then you start selling it. You know what I mean? That's one way to look at the fade in the market. Okay. All right. Cool. All right. Can I explain a little bit about the actual forecast and previous? Okay, cool. So this is actual. Let me just give me a second. Let me see if I can bring up Forex Factory here. The reason why I want to bring up Forex Factory because sometimes you give the revision number. Just give me 1 second. All right. NFP. Where's the revision? There we go. See this? If I click that, can you read it? The previous number is actually revised up from 216,000. So let me explain this. I see the difference between the actual NFP, 353, while previous actual is 216. How about the previous 333? So revised from 216. Get it? It's revised up. So last month's number, the final number is not 216, but the final number was actually 333,000. There might be some delays in data collection. That's what we get. We typically get revisions, right? So imagine this. Last month, we were looking at 216,000. Everyone was like, whoa, that's strong for the US dollar. In reality, it was actually 333,000. Now, what's surprising, the forecast is 180, 187. Doesn't matter what it is, right? Because if you look at different news site, you're going to get different forecasts. But if you take a look at the forecast and the actual results, results, it's still higher than previous month's revision, which is high. Let me just, sorry, I'm not good with numbers like this. Like 216 minus 333, revised up by 117,000. That's 1/3 up. And then the consensus, 353 minus 187, that's 166. That's nearly double what the consensus is. So what you're looking at here, last month's number was good. It was revised up. The actual number was even better. This month's NFP release beats that number. That was even better. So yeah, you get a crazy addition here. And I can tell you, in my trading careers, have I seen this? Yes. But it's very rare that we actually see this, where we actually get a very high revision and then the actual number still beats that revision. The US labor market is so tight right now. It is so strong. We don't I can't actually go through the breakdown, but I will need to look at the breakdown in terms of why this number is high up there and why was the revision high. But this is something that we typically do over the weekend, and then we'll kind of push it out on the outlook for next week. Okay? All right. Cool. So, with several summaries here, we got strategy based on two pending orders. Done that. You can trade before the data release. We trade after the data release, but we trade during the data release. Okay. So for more effective trading, you can actually combine the strategies as well. What we're doing just now is we did some initial reaction to the market. We trade that. And we did some analysis, some potential for price to do a little bit of a fade. Okay, so we're basically analyzing after the news. All right, so the code again is Nonfarm 2024. Make sure you are using this code if you're depositing into your Octa trading account. And this promo code expires on the 31st of December 2024. So this is typically the long year code that we are going to be using. All right, let's do some Q&A session. We still have about 6 minutes time anyway. What about the equity market? Yeah, it's as I said, it's actually going to be very interesting to talk about the equity market here, because this is good for the economy. So it might not have the same reaction as the market. I think what's causing the drop, it's not that the number is good, that it actually dropped. that the US dollar is stronger. No, it's just a thought that, you know what, FOMC might be right. They don't need to cut interest rate earlier. You know, that takes away some of the risk sentiment, risk appetite in the market. Okay, but the equity market, you know, it's still strong overall. This is the daily numbers. We still have that bullish impulsive move overnight on the US 30 here, Nasdaq 100, sorry, not US 30. If we take a look at it on the early time frame, we have that drop, but we're still high in terms of correction. We're just expecting this one to open lower. So think about it this way. Tonight, you might be able to pick up a cheaper stock because the index is down. You might be able to pick up cheaper stocks. Simple as that. Now, in terms of whether or not we're actually looking at a reversal, let's say on Nasdaq here, I doubt it. All right, we're still going to be maintaining a position above 17,250. We still have that strong support at 17,000. Probably going to retrace about 50%. That's about 17,350. Potentially 61.8%. 17,320. Not that significant. But I do expect a little bit more bounce to happen on the US 30. I doubt that it will actually slice through like this today, because when we talk about the US 100, sorry, not US 30, Nasdaq 100, we only have a couple of hours anyway, right? The market's going to close on Saturday, so realistically, this is the projected move for Nasdaq. And take a look at where the supports are lined up. We got 50%, 61.8%, 78.6%. That's also the base of the Ichimoku cloud. So yeah, I do expect potential bounces on the US stock market. Can we expect the same bounces on the Euro USD and Pound USD? Potentially, but it might not have the same bounce that could happen on the stock market. With this data, would stock market go for another bull without a pause? No. We don't know how the stock market is going to react to it, right? Market hasn't opened yet. Market's going to open very soon. In about a couple of minutes, yeah, it will open. But this is pre-market. Pre-market, we're expecting the index to come in a little bit lower. Okay. All right. I don't think I can talk about the Apple earnings. Well, then we can talk about this on the Telegram channel. I think you're subscribed to my Telegram channel, so feel free to ask me there. I'll probably have more time to explain a little bit on the Apple earnings as well. And Meta. Meta was good. I'll actually read up on Meta because I'm very well invested in Meta. So ask me there on the Telegram channel, and I'll give you a, kind of a more thorough explanation. I don't think 3 minutes is going to cut it if we talk about it. If I start talking about it, we're going to exceed that. And tonight, we're not looking at the market, right? We're not doing live market analysis. We're doing live NFP trade. We just did our live NFP trade. It was a good NFP trade. I think this is the first NFP trade for 2024 with Octa. We missed January. Right, I was ready to go. But it was a holiday for a lot of stuff with Octa, so we kind of missed out on the January numbers. All right, cool. With that case, good luck. It was a fantastic trade, very easy. The numbers don't lie. It was a very strong drop, very strong reaction to the market. And let's wrap it up for this week. Have a fantastic week ahead. Have a fantastic weekend. And don't forget, we are going to be doing our news trading session, I believe, next week. And let me just check on the calendar. I believe it's next week. And then next week, we're also going to be doing the CPI numbers as well. So, yeah, I think there's actually going to be 2 webinars next week. All right. So, with that, I'm signing off for this week. Good luck with your trades. Have a fantastic weekend ahead. Stay safe, stay profitable, and I'll see you next week. See you all.